This is a brief video of how we could handle the rally that took place during the morning and pretty much early afternoon of September 4th. Now we're going to look at chart number 1 here. We'll expand that out. And very obviously, this rally up here was a real strong move. Now, the question arises whether we need to wait until the lows of the bars need to move back into the upper value area. The answer to that is no. What is important is that the slope of the upper value area is continuing to agree with the rally. Now, when that's happening, you don't need to wait for the bars to retrace back into the line. Let's just quickly contrast that with what happened on the 5th. You'll notice that on the 5th, from the open right in here, the market moved, well, really back to the lower value area before it rallied up. When the upper and lower value areas are, well, in particular during a rally, when the upper value area is relatively flat, that might be a good reason to wait for it to retrace, or to the point of control, or to the lower value area. But when it's keeping pace with the rally, it's just continually the slope is continually positive. No reason to wait. Okay, so you've got a positive slope. You've got yourself in an overbought condition, or at least with a positive slope at the very beginning of the day, and then into an overbought condition. Now, that being the case, all we need to do is just find an oversold condition to take a long trade. So what are we going to use? If we used chart number 3 here during that same period of time, all right, it never came back. It just continued to move up. Now it finally came back down here late in the day. But you had all of this opportunity to trade. So where was your entry? Well, it certainly wasn't when it came back to the upper value area, because for the most part it didn't. Neither did we get much of a retracement, as is indicated by any of our indicators. So in that respect, what do you have on this chart? What's going to help you to make a decision? Well, you've got a couple of possible opportunities. Wait for the modified RSX here, all right, to dip down below the zero line and begin to slope up. There's one opportunity. Here's another opportunity. Again here, again here, all right. There's another one. You've got another one here, as well as in here, there, here, and so on down the line. You've got numerous opportunities to take a long trade if you just looked at this indicator. All right. However, a better approach, in my estimation, is to not use chart number 3. Use chart number 4. And if you've been working with us, you know what that is. So now what you're looking for is your oversold condition. You've got it here. Okay. So you're going to watch the premium right in here. Of course, it comes right down into the upper value area at that point, but it doesn't return. So, I mean, this was a good opportunity, but that was the only instance where that occurred. The other instances, might have been here, where it just barely comes down, to that level. Doesn't really get to be oversold. You get another one a little bit later, right in here. Now again, you're going to need to watch the premium very carefully to know where you're going to execute that trade. You get another situation right in here, right? You get another situation there somewhere between 917, 919, which doesn't really produce much. But when you came back here, to the same price, another opportunity for trading that perhaps existed. And again, right in here. I mean, it kept coming back to 45.50, and you could have cherry picked that. Again, watch the premium, and we'll come to that in just a minute. But just to point out, yeah, when you've got a strong rally like that, you're not going to see our other indicators get to an oversold condition. You're going to need to use a much faster approach to identify that, and I think some of you already know that. So, yeah, you're gonna look for this oversold condition, which persisted right there at the same price, 45.75. For nearly, how long was that? My goodness, 17. Yeah, that's that was almost a 20-minute period where there wasn't really much to work with. Okay, and it didn't move up that much either. And then finally here, now it became real clear. So up she goes. And then you get another opportunity back in here. This doesn't pull off much, but in here you get another opportunity again in here, and so on. So let's take a look at what the premium was saying and see how that could have been useful in any one of these instances. So what we'll do is we'll go back here. Let's pull up the premium chart. And during this rally, all right, now let's look at our second opportunity, because the first opportunity was very, very clear. So we'll just expand out this chart here, and let's look at this move right in here at 849. She comes down, all right, and then again between 8:56 and 9 o'clock. All right, this was maybe not real easy to identify that, because you might have expected it to hit zero. So in all fairness, we won't even consider that. Let's just go over here, because this one's real obvious. Now, if you were successful, you had nothing to lose on this one. But point is, down here, we hit zero. It's at 8:57, so this is corresponding right in here at this move down here. Okay, so we're right in here. Let's blow this up just a little bit more so it's more pronounced. And let's see what the premium is telling us. All right, so, oops, right in here. There we go. All right, I just want to expand this enough so that you can get the resolution on this. So just bear with me. Okay. All right. So now just follow, if you will, follow your indicator right here. This is really easy to see. We're not really getting any positive slope in here. Finally, we're getting a positive slope right in here, okay, on the indicator sitting in subgraph. Well, this is actually subgraph 2, 3, 4, 5. This is subgraph 6. Okay, got a positive slope coming in here just before 9 o'clock. All right. Everything else is positive on all of the other indicators. You can also tell this because you're getting higher lows on the premium. Right? You're getting higher lows. We finally turn positive on our slope right in there. Okay, so it's perfect. It's a perfect opportunity. Okay, so there's your first opportunity, and you see that the easiest way to do it is just simply look at your indicators. Simply look at your indicators, and up you go. So there's opportunity number one. Now you get another really quick opportunity right in here. This is not quite as obvious on this indicator here. Again, I need to expand this really. There we go. Now it's real clear. All right, so you had a little bit of a positive slope going right in here. Didn't last very long. And then you had another retracement, and we're into a positive slope again right in here. Okay. But we're not oversold on our indicator here. We don't get that oversold condition until 9:17. Let's see that right in here. Okay, so we're into 9:17 right in here, and here we have again positive slope. Everything is positive here, and you had several opportunities to get into this trade. But as long as you're in a positive slope, you're doing well. Now, if we look at the raw premium data, we've got higher lows right in here. Again, right in here. We've got it right in there. Again, you got some positive slope. You don't know exactly how that's going to perform, but it's there. All right. So you could have gotten into it, and now as you get into this trade and you continue to see higher highs on the premium, okay, you're already getting an idea, should be going a little higher. Now you do, but you get a divergence, it falls back, you get a relative low here on the premium there, so you're going to get another opportunity here, and you're hitting equal lows there on the SPOOs, nice positive slope, so another opportunity to get in on that trade, and up she goes. All right, so let's look at our next opportunity, which again is right in here. So there's really plenty of opportunities to get into this. Plenty of opportunities. This is real clear. Now I say it's really clear because the lows are well, they're above fair value as of today. I think fair value was back at 175 on the previous day. So you're in any event, you were well above fair value at this point in time. So you knew that thing was going up. And then you get another opportunity right in this little dip, and you'd want to wait, okay, until we test that low, and you got a positive slope again. So really there's all sorts of opportunities to get into this. You get another instance right in here, right? Now, where would you pull that trade? Well, again, you want to have a positive slope, and you've got a positive slope in here, but you've got a little bit. You got a little bit of a heads up here. You're way high, okay, on the fifth indicator here. This is way high. So you may have wanted to just sit back and hold out for another opportunity until this thing drops. Now we're way high here, okay, but this is a much slower indicator, much slower indicator. So you're less likely to run into trouble by getting in on any of these moves right in here with a positive slope. Okay, so you had very little drawdown to get into a long trade there. And you're into 10 o'clock. Let's now look at our next opportunity. Okay, got another opportunity right in here. It's brief, but you can see the divergence on your indicators. They're finally all going positive right in here. And, you know, it just takes off again. We have another chance. It's a brief one right in here, and then again a better opportunity right in on this low. Now, is there anything to give you a heads up on this retracement here? And the answer is no. There's really nothing on the premium that's giving us a heads up that we're going to be seeing a retracement back to that price. Nothing at all. Okay, so we just test those lows, wait for the divergence, and you get numerous opportunities to jump in on this nice little move. Doesn't go very far, but it's enough to make some money. Okay, so we don't get our next real opportunity until right. You get a little one in here. Right in there. Doesn't go anywhere. You get another chance. You know, maybe one or two ticks under that previous low. And yeah, right in here. That makes good sense. Take that and ride it up, wait for the wave, takes it up again. Okay. All right, so really there's numerous opportunities to pull off a long trade, you know, a long scalp. Now, could you have known where this was headed? You know, that's really your ultimate question, because you know it's taking, you know, the 6-8 tick move wasn't real positive or possible unless you held that trade, because the market moved kind of slow with most of these instances. So you really needed to have some indication of where this thing was headed. All right. So to know that on the 4th, you know, going back to your composite is going to really be useful. So let me show you what we have here on our composite to help us out. Now here's our rally on the 4th, and where could we see that there might be some measure of resistance? Okay, so we're here on the 4th. Make sure, yeah. All right, so I'm just going to move this out of the way. And I'm going to look at two composite profiles. So as we're moving up above 40, let's just say 47 here. All right, so we're right into this area. First thing I'm going to look at is, you know, where is the low volume area in here? Because we see a tendency that the market will move up to kind of fill the lower volume areas. So we've got one right there at around 48 and a quarter. We got another one that's almost the same at 49. You got another one way up there at 50. All of these are possibles based on the composite from the low, really, on the 27th. But if we look over here at the high that came off of the 5th, which is the high of all-time history, and you look at the composite here, again, look for the low. Well, there's a couple of things you can look for. Number one would be any higher value area, which in fact you have this little spike in here. Let me extend this a little bit more so that you can see it. I think that will work if I set this to 5. I hope I don't mess this up. Good. That's just the opposite way. Pardon me. Let's try that again. No, that's not giving me what I wanted. So, I'll do it one more time. Let's take this up to, still isn't. There we go. All right, it's not helping us too much to see this, but I look at where the profile was the highest as we're moving up here. And the highest profile up until that point was right there at 48.74, which is also kind of a low volume point right in here. So that's a really good indication. Yeah, we're going to move up to that area. And then beyond that, you get another dip in the profile here. You see that gap? If you don't see it, let me make that real clear. Okay? Just really make this clear. You got not a gap, but you get a low volume area. And we see there's a tendency to kind of fill in the volume right in here. So I'm looking at 49.75, okay? And then we just start to climb, okay? So 49.75 in that neighborhood, yeah, that's a pretty good parameter of where this thing is headed. So when you're back here, all right, when you're back way over here, let's get this back to where we were. Okay. As this thing is climbing, you see, you know, we could be getting into 49.75, and you're way back here, you know, jumping in on the last move, and you're at 46. You know, holding it up until, you know, we get into that 49 range makes some good sense. Now, once you break through that, well, now you better go back to the drawing board and see where this thing is potentially headed next. So holding that trade until you get it into that 49 range, now that just made good common sense. And you notice, once you did, market came down a little bit, pulled back better than 6 ticks there. Let's go back and look at this very carefully. So we now fill in this little hole, as I would call it. So where is this thing headed after this? Okay. Well, the next time you really get a bump in the profile is right there at 52.75. Okay, now compare that to the more recent profile, and the same is true. 52.75. You get a nice little bump there. So if you pass it up, you're kind of saying, you know, 52.75 looks like a very good possibility. And so you go back here, you're coming in on this rally, you're moving above 49, you wait to 52.75, and guess what happens? you get up there to 53.50 and it's pretty much over. Okay, so you had that nice move up here to work with based on the profile. Okay, so that's how we could have analyzed this. Now, we already made a quick video on what happened to the premium much later. All right, later on during the day, right in here, we had a brief video on this. So if you want to see where that was at, go back one day and take a look at that. But with all fairness, let's just go back here for a second, because it went up to 54.75, which is much higher. Let's look at the profile here. Where do you see? What do you see staring out? Point of control, 54.25. It's right there, 54.25. Didn't go more than 2 ticks higher than that, and it said that was it. All right. So yeah, you broke through. You had that as a intermediate move, but your point of control, really clear there, sticking out like a sore thumb. And in fact, it went all the way up to that point of control. So what can I say? All right. So that's our quick video on the 4th and how you might have managed that with a faster stochastic. You know how to do that. So you look for the entries with a premium. Can't go wrong. This is Rod Kusin and Spooman for Risk.